I don't know what it's going to do over the next 3 months, but yeah, I'm bullish with say a 2-year view or a 5-year view or, potentially a 10-year view. I went through a long phase where I was, pretty skeptical on the asset. I was like, well, what if another currency is going to be better? Or what if the whole space gets so diluted? But once I saw the network effects really form, once I delved into the technology and why it's designed a certain way, um, ever since really early 2020, I've been pretty structurally bullish on it. And that really continues to be the case, over 4 years later.
Lynn Olden argues that while the US dollar and other major currencies still hold significant value compared to weaker currencies, these weaker currencies will eventually collapse, and today's strong currencies will become the weaker currencies. In such a scenario, the US dollar may follow a similar fate to the Bolivar or the Lebanese pound. This is why sound money advocates like Alden believe it's time to overhaul our outdated monetary system. They propose moving away from a debt-based, inflation-prone system to one that emphasizes scarcity, deflation, decentralization, and seamless payments through a robust digital network. Bitcoin, of course, checks all the right boxes. With the leading crypto's rising popularity in all corners of the world, coupled with the current, very gloomy macro picture, Alden believes the United States and the rest of the world are drawing closer to a Bitcoin standard era, an era during which we will see an explosive increase in the global adoption of Bitcoin and an even more explosive increase in the crypto asset's price.
So we have this kind of two-tier money system, really kind of three-tier when you incorporate fintechs and things like that. So we have this kind of 2 or 3 tier centralized money system. And the challenge there, so, in the US, at least for the past half century, we've had it pretty good. Our currency loses value slowly, and we have plenty of investment vehicles to save into. Whereas, for example, when you look at a country like Egypt, they don't have the S&P 500. They don't have, their stock market's not a reliable investment, kind of a wealth building vehicle. They've got real estate, but real estate's of course illiquid. So there's all sorts of downsides with that. They can't obviously invest in their own currency in any meaningful amounts because you've got an average of double-digit inflation over a 50-year period. And so what things like Bitcoin and stablecoins do.
And could you just explain what a stable coin is? I'm sure it'll become clear, but
Sure, a stable coin is when an entity holds dollars or things like T-bills, for example. You can wire them money. They will then give you tokens that are redeemable, at least by large entities, for those dollars. And so they're basically like banknotes in digital form. And then even smaller entities that don't have the right to redeem them, they can still trade them around. And the main ability there is that it allows countries that have historically had that desired dollars because they wanted some stable currency that's more stable than their currency, but doesn't have the volatility of gold or Bitcoin or something like that. It allows them to access dollars more easily and in more digital form as long as they have a smartphone. And so they're very popular in Argentina. They're very popular in Lebanon. They're very popular in Nigeria. We live in a world where there's 160 currencies, more or less. They're all kind of central monopolies. So if you're in Nigeria, you've got to trust the Nigerian central bank and the Nigerian government and how they're going to manage their currency. Borders are fairly tightly controlled, which is, you can only bring so much value in or out of an airport. Bank transfers are quite controlled and often done at artificial exchange rates that differ wildly from what the actual kind of market rate for that currency is. And what stable coins and Bitcoin do is, if there's a Nigerian graphic designer and she holds up a QR code on a video call, I can pay her in whatever money she wants. She could ask for Bitcoin, she could ask for dollar stable coins, and it goes to her around her local banking system. And she's able to then use that peer to peer. She can bring it with her wherever she goes if she ever leaves Nigeria. And she basically has more choice over what money she uses outside of her currency monopoly. Bitcoin is the fully decentralized, fully scarce version of that. It's the one there's no central hub. The thing you have to deal with is that higher volatility and the uncertainty of what it would be worth in, say, any given 1 or 2 year period. Whereas stablecoins, the downside is that they are fully centralized. There's some entity that's holding the assets, And you have to trust them. You also have to trust their ability to operate in a regulatory environment. But the way I would phrase it is they kind of serve as offshore bank accounts for the working and middle class rather than just the wealthy. They kind of just compress the overhead of running one of those systems where if you're in Argentina, you might not trust your own government's ability to run the currency. You might not trust the banks because in the past, even if you store dollars in them, they can get confiscated away. But they say, well, for small amounts of working capital, I'll trust this offshore entity.
Currency debasement is currently more debilitating in emerging economies, but Alden reckons it's only a matter of time before it spreads around the globe. According to Alden, this could be the reality of many developed countries in only a matter of years, as long as governments keep printing indiscriminately. As Alden and other sound money advocates have warned for years, the problem is quickly beginning to spread to the developed world, as Japan's recent growing economic woes illustrate. The Japanese yen fell to 37-year lows against the US dollar on Wednesday, fueling concerns of a debt bubble explosion, which will undoubtedly spread into other developed economies, including the United States. Let's get back to the Alden's interview.
What I don't see, however, is how Bitcoin could serve any real use case for an American today.
Sure. So one of the attributes of money, it's that which you hold, even if you don't intend to consume it yourself. That's kind of historically where money kind of came from. And so, for example, if we hold a gold coin, we're not necessarily intending to melt it down into jewelry or industrial use anytime soon, but we're kind of holding it knowing that it's a useful thing that other people use.
Store of value.
Store of value. And as an American, to your point, we generally don't find ourselves troubled for payments or even troubled for savings. We have no shortage of savings vehicles that are reliable. But if you kind of view it as something that could be useful for billions of people around the world, something like half the world lives under shades of authoritarianism, half the world lives under kind of persistent double-digit inflation and multiple, hyperinflations within our lifetime. Bitcoin is something that Americans often treat more as an investment, and it's one that happens to have outperformed the S&P 500, the Nasdaq, almost everything other than Nvidia over 3, 5, 10-year period. So for us in America and Europe, it's often seen as an investment, which I think makes sense. But in, say, Africa, where there's roughly 40 currencies, or Latin America, where there's roughly 30 currencies, and every one of those currency borders is a friction, most of those currencies are undesirable to hold, is something that's useful to them, and that therefore it is an investment for people that kind of understand that there is a use case, even if the use case doesn't apply to them. And like America, I do think that we are running this more structurally high inflation because of the things we talked about earlier in this discussion. But that doesn't mean they have to happen super quickly. It doesn't mean that things have to end. If you kind of do the rough math, I mean, Congressional Budget Office expects 20 trillion in net treasuries to be issued over the next 10 years. They also assume no recessions. So if there's recessions, that number is probably going to be higher. They generally undershoot the numbers. So let's say conservatively, 20 trillion in treasuries are going to be issued. If you look at how much, gold's going to be mined over the next 10 years, at current prices, it's somewhere in the ballpark of 2.5 trillion. And the amount of Bitcoin that's going to be created at current prices is something like 70 billion. Now, of course, gold and Bitcoin can change in price to accommodate more inflows if people want to put more money into them. But the point is basically, if you're just kind of saying, what do I want to own that's pretty scarce? Obviously, good equities are one of the options. Good real estate can be one of the options. Art is historically one of the options, especially for wealthy investors, but also Bitcoin is, because it's liquid, it's fungible, it's portable, and it's got a lower kind of new supply growth rate than a number of other kind of liquid investments. So I think from an American perspective, it's often viewed as an investment, whereas in other countries, it could be viewed as a lifeline. I don't know what it's going to do over the next 3 months, but yeah, I'm bullish with, say, a 2-year view or a 5-year view, or potentially a 10-year view. I went through a long phase where I was pretty skeptical on the asset. I was like, well, what if another currency is going to be better, or what if the whole space gets so diluted? But once I saw the network effects really form, once I delved into the technology and why it's designed a certain way, ever since really early 2020, I've been pretty structurally bullish on it, and that really continues to be the case, over 4 years later.